Assalamualaikum wa rahmatullahi wa barakatuh. My name is Mukhtar Ali Yusuf and my matric number is 274852. So we are group 4. I'm here today to present our assignment. Firstly, I would like to share a brief information about the background of the Bonia company. Bonia Corporation Berhad was founded in 1974 by Mr. Jian San Sem, originally as a designer, manufacturer, and wholesaler of the leather goods in Singapore. The brand name Bonia was inspired by artwork by Ciambelloni, an Italian sculptor from the 16th century, which Master Gian saw during the leather trade fair in Bologna, Italy. Bonia opened its first official boutique in Singapore in 1981 and later expanded to Malaysia in 1988. Bonia company transformed from bag-making company into successful Malaysian fashion label and became leader in the leather fashion industry. The company expanded its core markets beyond Malaysia and Singapore. Also, it enters countries like Indonesia, Hong Kong, Brunei, Taiwan in the years 2000 until 2007. And lastly, Bonia company is involved in various aspects of the fashion industry, include product design, manufacture, promoting, marketing, and distribution, and other more. That's all for the brief information about the background of the Bonia company. Next is ratio analysis. The first ratio is current ratio. Based on the information provided in the table, Bonia current ratio was higher in 2021 compared to in 2022. In 2021, the current ratio was 2.89 times, whereas in 2022 is 2.76 times. The next is quick ratio. The table shows that quick ratio for the Bonia in 2022 is higher than the ratio in 2021, which is 2.16 times and 2.039 times in 2021. Next, cash ratio. This table shows that cash ratio for the Bonia in 2022 is higher than the ratio 2021, which is 1.282 times and 1.192 times in 2021. Next, days sales in receivable ratio. The table shows that days sales in receivable ratio for the Bonia has higher days 2021, which is 65 days compared to 2022, which is 51 days. That's all.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nurul Izzah Akhtar binti Muhammad Tajuddin, matric number 288928. I will continue the presentation with the inventory turnover ratio. The table shows that the inventory turnover ratio for Bonia in 2022 is 2.61 times and in 2021 is 2.04 times. Next is the day sales in inventory. The table shows that Bonia has lower day sales in inventory in 2022, which is 139 days, compared to 2021, which is 107. Next, the gross profit margin for Bonia in 2022 is higher than in 2021, with the ratio 57.8% and 52.43% respectively. Next, Bonia has 16.91% operating profit margin in 2022, which is higher than 7.44% in 2020.
Assalamualaikum warahmatullahi wabarakatuh. My name is Hidayah Alfinurul with metric number 276261. So for the ratio analysis for the net profit margin, is the table shows that the gross profit margin for Bonia in 2022 is higher than in 2021, with the ratio is 57.8% and 52.43% respectively. And the total debt ratio is the table shows that Bonia has 16.91% operating profit margin in 2022, which is higher than 7.44% in 2021. So next is the debt to equity ratio of Bonia in 2022 is higher than 2021, which is 1.10 times in 2022 and 0.98 times in 2021. This means in 2022 Bonia has enough compared to the year 2021. For the times interest earned ratio, that Bonia has 10.81 times in 2022 and 3.82 times in 2021. This means that Bonia price rise dramatically in 2021 compared to 2021. Thank you.
Assalamualaikum. My name is Nazikira. I will continue the ratio analysis of cash coverage ratio. The table shows that the cash coverage ratio has increased from 10.88% in 2021 to 17.20% in 2022. Next is the operating cash flow ratio. The table shows that the operating cash flow ratio has increased from 1.11% in 2021 to 1.15% in 2000. Ratio analysis of dividend payout ratio. The table shows that the dividend payout ratio is decreased from 52.26% in 2021 to 25.32% in 2020.
Assalamualaikum and hi, my name is Azatul and I will continue about the ratio. In 2022, the total asset turnover for Bonia is higher with 0.52 times compared to 2021 with 0.45 times. In 2022, the return on asset for Bonia is slightly higher with 8.61% compared to 2021 with 2.58%. Next, in 2022, the return on equity for Bonia was significantly higher with 13.13% compared to the 2021 with 3.89%. Next, for the company performance, the asset turnover ratio in 2022 with 0.52 times indicate that Bonia is less efficient in utilizing its asset to generate sales or revenue. Next, for the return on asset, the ratio in 2022 with 8.14% indicate that Bonia capable of generating a reasonable return on its asset. Next, for the return on equity, the ratio in 2022 with 12.14% indicate that Bonia able to produce a reasonable earnings invested by the shareholder but a good ROE, usually between 15% to 20%. Next, for the current ratio, the ratio in 2022 with 2.76 times indicates that Bonia has sufficient liquid assets and it might be able to cover its current liability. Next, for the quick ratio, the ratio in 2022 with 2.16 times indicates that Bonia can quickly pay off its debts by converting its liquid asset into cash without depending on its inventory. Next, the company performance on the cash ratio. The ratio in 2022 with 1.28 times indicate that Bonia has sufficient funds to cover its immediate short-term debt by using their cash and its equivalent. For the dividend payout ratio, the ratio in 2022 is 25.32% indicates that Bonia prioritizing in using the earnings to reinvest back into their business. Next, for the operating cash flow, the ratio in 2022 with 36.66% indicate that Bonia has generated a profitable return from its business operation efficiently. Next, for the day sales receivable, the day sales in 2022 is 51.4 days, which is lower compared to 2021, and it shows that the company is collecting payment more quickly and receive the cash faster.
So, for the company performance, inventory turnover, the ratio in 2022 with 0.52 times indicate that Bonia is less efficient in utilizing its asset to generate sales or revenue. For days sales in inventory, the ratio in 2022 with 12.14% indicates that Bonia able to produce reasonable earnings invested by shareholders but good ROI, usually between 15% to 20%. For the gross profit margin, the ratio in 2022 with 8.14% indicates that Bonia capable of generating a reasonable return on its assets. For the operating profit margin, the ratio in 2022 with 2.76 times indicate that Bonia has sufficient liquid asset and it might be able to cover its current liabilities. For the net profit margin, is the ratio in 2022 with 2.16 times indicate that Bonia can quickly pay off its debt by converting its liquid asset into cash without depending on its inventory. So next is total debt ratio. The ratio in 2022 with 1.28 times indicates that Bonia has sufficient funds to cover its immediate short-term debt by using their cash and its equivalent. For the debt to equity ratio, is the ratio in 2022 is 25.32% indicates that Bonia prioritized in using the earnings to reinvest back into their business. For the times interest earned ratio, is the ratio in 2022 with 36.66% indicates that Bonia has generated a profitable return from its business operation efficiently. For the cash coverage ratio, is the day sales in 2022 is 51.40 days, which is lower compared to 2021, and it shows that the company is collecting payment more quickly and receive their cash faster. Thank you.
Next is the suggestion or solutions to the company. The first suggestion is to maintain client satisfaction and environmental footprint. They must ensure that their customers are always satisfied with their products and the quality of products sold. Besides, the ability of customer service staff to listen, demonstrate empathy, solve problems, and interact with consumers can improve customer support and satisfaction. And the geographic footprint is related to how they manage their cash flow, profitability, and investment in order to expand into new regions.
Suggestion for company number 2 is build a good relationship with shareholders. Developing a good relationship can build a trust and confidence of shareholder to a company. For the example, Bonia must clearly state the amount of dividend received by shareholder in the annual report. It is important because investor will make a long-term investment if they get a confidence and trust of the company. We learn how to calculate the ratio based on the company annual report, but there are some difficult which is we are bit confusing to calculate the ratio because do not know the exact amount to use in annual report to calculate the ratio. But we solve it with ask lecturer, friend, and search in Google. That's all from us. Thank you.